Hello and welcome to the Grocers Cost of Living Roundtable, where we'll be exploring the origins of the cost of living crisis and its knock-on effects in the world of FMCG. I'm Emma Weinbrunn, the Grocers Managing Editor, and today I'm joined by my colleagues. That's Ronan Hegarty, the Grocers News Editor, Grace Duncan, our Fresh Foods reporter, Senior Reporter Maria Gonsalves, and Editor of Convenience Store Aidan Fortune. Welcome everyone. So inflated prices have been the norm for quite a while now, as the UK absorbs the impact of COVID and Brexit, as well as the impact of the war in Ukraine. That's not to mention the rocky political landscape in which the UK currently finds itself. So coming to Ronan first to talk about the supply chain, we obviously felt various pressures in the UK and globally. What would you say the main pressures are?
I think the main thing is energy prices. We've seen that, whether it's just ourselves and our household bills, but the cost of fuel, the cost of oil and gas has a tremendous impact on the cost of food on the shelves. And whether that's through the processing, the packaging, and also in even some of the products themselves. And so that is, as long as inflation remains high, as long as fuel prices remain high, inflation is going to continue to soar in the UK in terms of food prices.
Mm-hmm. As you said, there's been massive inflation. I mean, where particularly are we seeing that? Is that staff wages or as in logistics? Where is it happening the most?
It's across the board. It started with energy prices and the cost of living being driven up that way. But of course now we're seeing that firms, supermarkets, suppliers are having to put up wages and for their staff in order for them to live more comfortably. And that of course then keeps that sort of inflationary cycle rolling along really.
Mm-hmm. So inflation just across the board. And how is that impacting on the supply situation, if at all?
Well, we're definitely starting to see it. I mean, obviously, we're seeing huge amounts of suppliers knocking on retailers' doors, asking for increases in costs, increase in price. Retailers are scrutinising these demands as closely as forensically as they can to make sure that any kind of increases they give to suppliers is justified, because they at the same time are thinking about their customers and they don't want to have to put prices up as much for their shoppers. So we're seeing it across the board. We're also seeing things like suppliers now coming under pressure, and in fact supermarkets coming under pressure from staff in terms of potential strike action and demands for higher wages and stuff like that. So it's it's a real big sort of full inflationary pressure across the board really.
Absolutely, and it feels from a consumer point of view quite a shock, but the industry was preparing this for a while. So how prepared do you think that the food and drink was for all these pressures that have come into force?
Yeah, I mean, I think they'd be prepared. They know it's coming, but there's not a lot you can do. When the cost of doing business is so high, and it's not just the food industry, it's every industry. We're seeing that, in terms of anything you want to do. But essentially, when the cost of producing something is sky high, then the cost of selling it is going to increase as well. So you can prepare for it, but there's not a lot you can do. You have to eventually put prices up.
So it is an inevitable consequence of what's happening. And coming to Grace now to look at the impact on commodities in particular. So we've seen the pound crashing. Mm-hmm. What's the impact of that been?
So we are relatively self-sufficient in the UK of our food, but obviously it will have an impact on the things that we buy in dollars are understandably going to get more expensive. Obviously, it's changing every day with the political situation of how far that difference is. I think at the moment we're about 2 euro cents down. The pound is 2 euro cents down compared to the dollar, where we are 24 cents down on that. So it's across the board. It's not just the dollar, it's also affecting the euro as well. But it may mean that our exports are boosted, but we don't really know how that's going to look yet.
Sure. And coming back to imports, I mean, you mentioned we're fairly self-sufficient, mm-hmm. but is that being hit by any extent by Brexit? We obviously know growers have had a lot of difficulty getting hold of enough labour.
Yeah, Brexit is still playing a role, especially with labour. So all summer we've had workers complaining there aren't enough, and there are rumours now that Liz Truss is going to expand the seasonal worker scheme by an extra 20,000. That hasn't been confirmed though, so that's still very uncertain, but it's looking up. And in terms of exports, in other ways, other parts. It's not all just Brexit. The Russia-Ukraine conflict is impacting the fish tariff and how we import and export fish. So that has an impact there as well. So it's not just Brexit, but Brexit definitely still is playing a big role in how we deal with that.
Yeah, it's definitely, you've got a sort of complex import-export scenario as well as all these rising costs. And obviously this is having an impact on consumer behaviour. So that's why we're coming to Maria. So could you just give us an overview of how consumer habits have changed since the cost of living crisis started?
Yeah, so I think one of the key things that we've been observing the past few months is that people are actually switching to the discounters. So those who didn't typically do their main shop at the discounters are now going to Aldi and Lidl for their main shop. And if you take into consideration that convenience and location are two of the key factors behind one's, shopping supermarket of choice, when you see a growing number of people migrating to the discounters, then that's really a good indicator as to how the cost of living crisis is impacting shopping habits. But I think, brand loyalty is definitely suffering, but one of the main ways that you will see the supermarkets sort of adapt to that is by really driving that value message across. So you will have the likes of Sainsbury's and Tesco really focusing on their Aldi price match campaigns or price lock campaigns. So, this is their, value is very front of mind for everyone right now. So I think the battlefield now is very much value focused. You will see supermarkets very highly advertising their value campaigns, whether that be in store or online.
Absolutely. We'll pick up on the discounter point actually more in depth later. But firstly, sort of coming back to that value message, how much of a role are promotions playing in that? Yeah,
so promotions are playing a key role in that. But bearing in mind that, supplier relationships at the moment are quite volatile, it's more of a case of really sort of making sure that the key essentials are sort of locked in price. So supermarkets are focusing more on things like, your everyday essentials like bread, beef mince, pasta and things like that. So they will make sure that value is, as best as possible for the near future. And in terms of how it's affecting brand promotions, we're actually seeing that promotions have decreased in the past few months because it is quite hard for brands and suppliers to focus on promotional activity when they're actually trying just to keep a lid on inflation.
Yeah, absolutely. And obviously that's, from the supermarket side. Aidan, what are you seeing from the convenience side in terms of promotions?
There is support out there for independent retailers from the wholesalers and symbol groups, but as Marie says, it's a battlefield, and independent retailers, they cannot get caught into the value discounter battlefield. It's just too tough. They need to focus on the service and additional services for their customers.
Mm-hmm. And there are certain mechanics that convenience retailers in particular have used, for example, price mark packs. I mean, to what extent are those being threatened as prices just keep going up and up?
They're so divisive at the moment. I've always been a proponent of price mark packs within independent retailers, within convenience stores, because it offered transparency for customers and provided that opportunity for retailers to show the shoppers exactly what they're spending. But the prices are going up, shoppers are noticing, and the margins are still being eroded. So I don't think the price mark pack is dead, but I think more work needs to be done by suppliers to offer more margin for retailers, because they're the one facing the shoppers.
Absolutely. So a popular thing with shoppers, perhaps not so much of retailers at the moment. Of course, another way that shoppers are looking to get value is by trading down. That could be, for example, from branded to own label. Maria, to what extent are you seeing that?
Yeah, so shoppers have definitely been switching from premium to value ranges, as well as switching from branded to own label. I think just in the month of September, according to Kantar data, we saw that own label was up 8.1%, while branded was down 0.8%, I think. So you really see that people are, that's one of the obvious shopping habits that will sort of change, is that people will go for the value ranges rather than the branded products.
Absolutely. And what then has been the retailer response to this? Have they been increasing their own label ranges in response, and particularly are they focusing on the value lines?
Yeah, so I think it's not necessarily that retailers are sort of expanding their value ranges. In fact, according to our own research just recently, we saw that retailers have been making cuts to ranges, but it is just a matter of really focusing on value ranges at the moment, and really making sure that those key essentials are sort of, that the prices are kept down for the things that people buy the most.
Absolutely, and perhaps promoting those as well more
Yeah, exactly.
as part of their offer.
Yeah, definitely.
Absolutely. And obviously, own label, that's great for retailers, not so great for brands. Grace, what are the challenges for suppliers at the moment, and in particular brands?
Well, brands obviously are wanting to increase their prices in line with all of their costs going up. And we've had a couple of notable incidences, such as the Heinz and Tesco fallout, where they were taken off the shelves because reportedly Heinz wanted to increase prices by what it seemed to be about 30%, but that's reportedly. And obviously that's now been resolved. And then we had earlier this year, Upfield have been shrinking pack sizes while increasing price, so to try and mitigate that a bit, to mitigate passing that on to consumers. But it is, we are seeing that consumers are switching out, and in some ways there's not. Brands just have to keep offering what they can to differentiate themselves from that.
Yeah, absolutely. And the ones you've mentioned there, so like Upfield and Heinz, these are massive brands. What's the situation for smaller suppliers who perhaps don't have that big brand weight?
Yeah, it's very difficult, and obviously it depends on the sector. I think what we're seeing a lot of is that consumers in fresh foods are swapping out to cheaper proteins or cheaper options, whether that's wonky veg instead of normal veg, and that is having a big impact on the production side. So growers don't get paid the cost of production a lot of the time with wonky veg lines. So while it is good for the consumer and they are still getting paid, they're losing money, and it's not very hard to come back from that. And then we're also in seafood and fish, their fuel prices are going up, and it's hard to offset that if you're up against the retailers and you're still trying to offer that cost incentive. So it's it's a mixed.
Tricky time. And to what extent are retailers being receptive to these necessary cost price increases?
I think it depends, and it depends when some of our growers that we speak to and some of our the suppliers we speak to are saying they are being receptive and they understand, and that is why the retailers are putting prices up, because it's unavoidable that we had one supplier in seafood saying they just had to pay people more because they could not do it without it, because they were losing money with the fuel and everything going up. They were like, we have to pay our people more. And so the retailers don't really have much of a choice, because we are seeing growers and suppliers step out of this, and we're already seeing people saying that if the prices don't go up, they will not be planting their foods next year, or they will not continue putting their boats into the water, which obviously will have a massive impact on how self-sufficient we are. But the same problem is happening in Europe as well.
Yes. So it's good to see, though, that people recognise this is inevitable. This is something that growers need to do. Because retailers, obviously, coming back to this point about the discounters, the supermarkets will be feeling massive pressure to compete with the discounters as their share starts to go up. We've obviously seen Aldi become part of the Big Four now. Rayan, to what extent do you think their share can continue to grow?
Well, I think it can. We were seeing that in the last Kantar data that sales at Aldi and Lidl were both up over 20%. The main supermarkets, Tesco and Sainsbury's, closer to 3%. So there is a big shift there. Can Aldi and Lidl open enough more new stores to keep growing their market share? That's a big challenge for them. We're seeing that some of them are struggling to hit some of their previous targets for store openings. Finding the right sites is going to be a huge challenge. But it's not entirely one-way traffic. Obviously, I think we talk about everybody going into value and everybody trying to trade down and stuff like that. We've seen recently quite strong figures from Tesco and Sainsbury's, and that's being boosted a lot by premium own label. So if people aren't going out to restaurants spending 60, 70 quid on a meal out, they're more than likely to want to come stay at the weekend and have meal deals, premium products, good quality produce in the supermarkets and stuff like that, rather than, there is a cost of living crisis, but people don't want to be spent 24/7 worrying about absolutely everything they buy, and they will want, when they're staying in, maybe not going out as much, to actually have some really good stuff when they're staying at home for the weekend particularly. So yeah, there'll be big trading into commodities, own label, value own label for everyday stuff, but there'll still be a big opportunity around, your premium own label as well. So, when we're seeing the likes of Waitrose trying to fight back with dine in for £12 meal deals, sort of echoing that sort of famous M&S deal, and even trying to bring back free coffee. So it's there's different ways for the supermarkets to compete, and it's not just going to be one-way traffic that we're all going to discounters and we're all buying budget own label every single thing we do.
Yeah, absolutely. And do you think the supermarkets, especially people like Waitrose, have a bit more of an edge in that treat occasion?
I think they do. I think they need to really focus on that. It's a lose-lose battle if they try and take on Aldi and Lidl in terms of price. They've really got to shout about the quality that they've got, their sourcing standards, and try and get some excitement in. They've got Christmas obviously coming up. There'll be some exciting products hitting the shelves and already hitting the shelves and stuff like that. And it'll be premium stuff that makes a difference for them. It won't be they trying to compete on a purely pricing thing.
Yeah, it's generating a bit of excitement around
Absolutely.
what they offer. I mean, going to a complete opposite, we recently had Mere close its doors, which was described as one analyst as one step away from a food bank. So obviously that had challenges, and partly because it's Russian owned, but is there, do you think, space for someone else to come into that slot and do the real bare bones?
I don't think so. I think the market is pretty well supplied. I think you see what Aldi and Lidl are doing. They're taking market share now, not just from the supermarkets, but also the variety discounters, the likes of Poundland and people like that sort of thing. So, I don't think there's a case for that sort of real ultra budget without any kind of theatre. People, times are tough, and we are seeing a lot of people shifting towards food banks and things like that. But for the vast majority of retailers, they still want to offer some excitement, some fun, some theatre, and you don't want it to become a really miserable experience. So
No.
I'd be very surprised if something like Mere returned.
Yes, it's almost, the discounters almost have got the right balance there.
Absolutely.
Which I think is what's made them so successful, and it brings me on to Aidan, how the convenience market's going to respond, because obviously during COVID we saw convenience, the sales go up, which is down to people shopping more locally. Now, could it be that people shift out of convenience and towards somewhere like the discounters, which are perceived as cheaper?
It could happen. I would agree with Ronan. The footprint's probably not there. They don't have the estate. It's convenience because it's handy. So if the store's on your doorstep, that's where you'll go. In times of economic hardship, consumers will drift towards the little and often shopping. So it's the top up mission rather than the big shop, which is where convenience store owners will benefit. So that's really what we're seeing at the moment, and I'd expect that to continue. As I've said before, we cannot get into a price war with the discounters. So it's just focusing on the additional services like bill payments, the parcel delivery collection, that sort of thing, just to get people in the door, and then it's the upsell.
Yeah, obviously. And talking about extra services, we've had a lot of online as well, haven't we, through convenience, which typically comes at a premium. How do you expect that to fare as costs get tighter?
I think consumers will shop wherever they can afford, and it will be a challenge for convenience store owners, and I'm sure other retailers as well. They'll shop at their feet and with their wallets, and so it's going to be a challenge. But you're not shopping. When you shop online, you're shopping for specific items. You're not going to stumble across something, and you're not going to get the extra impulse sales.
No, absolutely. And we just look at between convenience retailers and wholesalers, who would you say is bearing the brunt of these rising costs the most?
Retailers. I mean, wholesalers have their challenges and their costs, and they are doing their best to help, mitigate that and absorb some of the costs. But at the end of the day, the retailer, they're at the front face of all this, and they don't necessarily have the financial structure that a wholesaler might have. So they are much more vulnerable to these increases.
Absolutely. So would you, as convenience store editor, do you have any tips for C-stores and how they would survive this crisis?
Well, be forensic about your range and your offering. Have a look at what else is out there. We've just spent this entire recording talking about saving money, but maybe it's the time to investing in energy saving technology, LED lighting, chiller doors, electronic shelf edge labels. They're really good about saving manpower amongst staff, and that staff can be deployed elsewhere to help improve your service. I think what retailers shouldn't do is try to take on too much themselves.
Sure.
Cut staff, maybe rejig rotas, but not try and do everything yourself, because the standards will fall, and that's your standards will be key to independent retailers surviving this.
Yeah, so investing almost in things that can save you time and money in the long run, like
Absolutely,
electronic
it's
shelf
future-proofing
labels.
your business.
Absolutely. Great. Well, I think that's a really good point to end on. So as we've said, the outlook remains uncertain, and it will be fascinating to see how the issues we've covered today play out in the weeks and months to come. So it leaves me to say thank you again to our panel. That's Ronan Hegarty, Maria Gonsalves, Grace Duncan, and Aidan Fortune. And thank you so much for joining the Grocer and Convenience Store for this discussion. Keep up to date with our latest coverage at thegrocer.co.uk. Take care and see you next time.